The U.S. debt ceiling has hit some new heights, $40 trillion. What does that mean for the real estate market where we stand today? Let's go ahead and unpack that. Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38, and today we always start with what's active in the market. We have 1,153 total actives. That is 150 more at the same time comparing to a year ago. That's been consistent. While at the same time, we have 435 total pendings. At the same time, we were around 460. So we're operating about the same pendings. What's happening to the debt ceiling and how is that affecting us? Well, there are some concerns. It's kind of causing this volatility in the stock market, but it's not really affecting the buyer's down payment. That's not the issue. The issue is when America goes through this debt is sold off to other countries, and then those other countries are buying our debt through that 10-year Treasury, for example. And the 10-year Treasury, the bonds are controlling the mortgage rates. So as the debt ceiling is soaring, the 10-year Treasury is climbing up. Now, it's going to take the interest rates up with it, but what the banks are doing, they're saying, hey, it's okay, we will lower the spread. So between the 10-year Treasury, where we're at today, 4.5, whatever that amount is, there's a spread amount which is about 1.75 to 2% above that, and that's what makes the interest rate. So the banks are saying, look, we're willing to lower the spread to keep the interest rates a little bit lower, but we're still inching up higher. So we know in about 3 to 4 months from now, interest rates are going to climb back down. We don't want people to refinance and wreak havoc to the system. So let's keep the interest rates artificially lower in comparison to the 10-year Treasury. All these news are kind of causing this, should I enter the market, should I not? But we are seeing more buyers enter the market in preparation for next year. So we're seeing buyer activity, people that have been sitting on the sideline for quite some time. They're seeing more inventory. Prices are actually looking better, but the interest rates are not so inviting. So let's go ahead and wait to see in the next month, 2 or 3, which I think is going to be more of the same, about 450 total pendings. Although the inventory is going to climb down as we were at 1180, 1190. We're seeing 1150. After Labor Day, it's when we're going to see less and less inventory. So if you want to reach out and you want to prepare for January 1st to look for your perfect home, feel free to reach out now. We'll go ahead and prepare you. 408-515-1613. Bye-bye now.